Hey traders, what's going on? Jamie Saettele here. It is October 4th, 2017. Welcome to the Midweek Strategy webinar with me, Jamie Saettele, and SV Trade Desk. All right, so let me know that you can hear me, and let me know that you can see the screen here. Pete says, can hear you. Vladimir, what's up? Kelly, what's up? Yeah, first of all, apologies for, I know our site has had some issues. There was a site update that was run, it's outside of our control, but it was run a couple days ago. So, over the weekend, and since then we've kind of had some issues, but we've got some guys working on it. So hopefully we'll get everything figured out and back to normal here ASAP. All right. Well, I'll start with dollar stuff. The charts from last night, right? So let's just do a quick review here on, we'll just go on dollar generally, right? So DXY, you remember back on the 8th, right? We had filled a gap, and it was during Asia, actually, I recall. And, we kind of was like, well, that's the low for a bit here. And the idea being that we probably trade back to 94.08 specifically, right? In DXY. We haven't made it there, but we made it to 93.90 something, so pretty darn close. And we are on the underside of, of the line here, of the former support line, channel support line. That's important, as is, just real simple stuff like RSI, right? Remember, if our premise is that we are in a broader dollar downtrend, right? We're in a broader dollar downtrend, and the high in January was critical. Then what we should be looking for on the daily chart is rallies to sell, right? Without being too simplistic about it, but let's be honest. I mean, that's what you want to do in a downtrend, is sell rallies, and you want to look for good places to sell them. Well, this is the first good place to do that. Okay. Does it sneak up into 94.08? I don't know, right? We got NFP on Friday. I tend to try not to think too much about that stuff. We've seen time and time again, of course, you've got, I've seen supposedly good dollar numbers and a bearish reaction or a quick spike, and the dollar runs a lot lower, and the opposite. So, it's all within context, of course, of the general market. Everyone, people will find a way to spin it any way they want or can. But yeah, so RSI is pressing 40, after coming from a oversold level, and it's simply in a downtrend. That's what you kind of want to see as far as, a rally that's, tradable on the short side. So from a momentum perspective, we've certainly corrected enough to, to say that we could be, at the next top. Now, even if that is the case, go back here, does that mean that the dollar is suddenly going to, hold on here, that the dollar is suddenly going to just fall like a rock to new lows? I'm not saying that's the case, and here's why. Let's say that we have, right, this might be a 1, 2, 3, we might be in a fourth wave of sorts before we go lower for real. Okay, and fourth waves are almost always, I say almost always, complex, drawn out, right? Where the second wave, where this is your second wave, that was a zigzag, that would be considered a sharp advance, right? A, B, C. Whereas, with fourth waves, you get triangles and flats a lot. So, in other words, it's more of a sideways, lower volatility movement. And my guess is, if that's what's going on, is this being a fourth wave, is that we've probably got a triangle in the works. I kind of discount a flat because we've already retraced to a point in, a price point where you'd be kind of looking or thinking, top, right? So from here we could be looking, basically lower, and then, you can envision a triangle trading sideways for the next, the next couple of weeks or longer, right? And maybe that happens into that November period. Recall that the analog suggested the dollar is going to hold up into kind of mid-November before you get the next downdraft. And that actually makes sense from a seasonal perspective as well. So, for our purposes, trading purposes, like right here, right now, I kind of lean towards the short side on the dollar after, thinking that we were going from down here, right, the channel, leaning on the long side of the dollar, but now I'm leaning towards the short side of the dollar simply because we're at the channel top. So without getting, too difficult, we've traded into resistance. Now, of course, that is US dollar, so that's going to be a little more broad-based, and DXY is similar. Again, the chart from last night. This is more euro, but same deal, okay? Sorry, okay, same deal. So whereas US dollar ended up hitting resistance from, the channel resistance, right, up here, DXY, which has been weaker because euro's been relatively stronger for much of the year, we've come into resistance from the underside. So you can scroll way back as well and kind of see points at which you've turned on a longer term parallel as well. So this is the 2008, 2011 trend line. And and this is log scale, okay, it's important. It would look a little different. When you're going back this far, you usually like to look at log scale, but I do suggest looking at both just because, sometimes you'll see something on one scale that you don't see on the other. I mean, it's not a science here. It's more kind of an artwork. But you can see this parallel, which I guess you could move up a little bit, but crossing through the highs here in 2010, and then some runs on support down here, just here in August. So again, does that 9408 need to get tagged? I don't know. For my purposes, as far as being generally dollar one direction or the other, I kind of lean towards the short side given where we've traded into. And then we did turn around yesterday. There's of course other evidence like dollar SEK, which put in a daily reversal yesterday as well. All right, so let's go from here to gold, and then we'll look at the different currencies. And of course, I'll take questions. Like I know Vladimir wants to look at nat gas. Kelly's talking about yen crosses. I actually did have it planned to look at some different yen crosses today, Kelly. So you're in luck there. Let's look at gold. All right, so gold. Here we have it. Gold. Okay. So daily chart, trend line, 2011, log scale, okay? This is arithmetic scale, log scale. And we have so far bounced. Of course, we were almost $10 higher this morning, but then the US market opened and gold got sold and stocks got bought because that's just what happens apparently in the US market. So this was right at, US traders come in, and that's all she wrote. So gold was looking really good about 2 hours ago. Not so much right now. Bigger picture. I think that if you get a rally here, this is a deep drop. I'd be looking at potential failure in gold up in the 1300 region. You do have that high volume level. I don't have it marked on here. I have it marked here. That's the FOMC level at 1301. Okay. So I would know that level, 1301, 25, 26 bucks away. I'd be looking for resistance up there. One thing that might be going on, and how deep this pullback is, it makes me think that it's a viable option here. Is that you might have from here, okay, from the July 2016 high, you might actually have a triangle, right? In other words, A, B, lower in C for longer than most people think, a D, and then an E, okay? If we were to do, and if that were the case, let's do an alternating leg 618 measurement, that would take you all the way down to basically 1200. And there would be intersection with the trend line there in mid-December. Again, gold seasonals are like clockwork. You tend to find, seasonal low points in mid to late December in gold. It's just the way it works, okay? It's been like that you can go look at a chart and look what happens in late December and January. January is almost always, even in crappy markets, January has historically been a pretty good month for gold. So, can we get down there maybe? So I'm looking for a bounce here, don't get me wrong, especially with the dollar, pressing this big resistance. So if we get a bounce here, in the prospects of maybe a fourth wave in the dollar, indicating that extreme dollar weakness is not really going to take hold just yet, right? We might have to wait for a little bit here. We have to play out a range and a consolidation in the dollar. So looking for a bounce, yes. We bottomed on a really great place yesterday. This is a parallel. The next one I would put would be actually closer to 1255, but 1263 over here is the February high. 618 of this rally is right at 1263 as well. So in my opinion, we are in the right area from a trader standpoint to be looking for a pop in gold. Okay, I'm just not confident or willing to even say that even if you do get a decent bounce here and you're up at 1300, people start to get excited about gold again, I'd watch out because of this possible triangle scenario. And one reason I give the triangle scenario so much credence here, if you will, is that if you look at from the July high, I mean, this is clearly a 3. I would, this is like it's overlapping. This is overlapping. This is ugly as hell, right? It's not like you have a clean 5-wave rally and a clean 3-wave pullback where you can just, say, well, we've got internal structure to be really bullish. Okay, so that's one possibility. So again, range trade, here's the name of the game. If you're bullish gold, or I'm bullish gold right here, but if you're trading gold, I'd be looking to take it up towards 1295, 1300, and then really I just reassess it at that point. Okay, another thing to know, 55-day average, so 200 days down here, but let's take a look at the 55-day average. Okay, 55 is up near 1291. I would be aware of that level. Again, it's in the same general area that we are, kind of paying attention to, but it's one that we've seen provide support before. The market's gone through it and kind of failed to get through it. Once it gets comfortable above it, you feel better about it. So just, I pay attention to gold there, but, I don't see any reasons to be saying that this low right here is like the low, right? Seasonal wise, better to wait, till December at the earliest, even very early January. All right. But looking for a bounce. So there's gold. Maybe we go to crude oil now because we are on the commodity tilt here. Okay, let's go to crude oil. Crude oil, did you see the thing I just tweeted about the, let's see. WSJ. I just tweeted out that article from the journal, a little headline from the journal. Okay, section B. This is your business section. And we are looking at I think it's on page 10. Maybe not. Maybe it's on page 11. Maybe it's on page 12. Keep on going. Page 13. Long one today. Emerging market headline. Okay. Here we go. So oil price forecast cut again. Okay. Obviously, this comes after oil's dropped, pretty sharp drop, right, over the last couple of days. And that just simply, piques my interest in looking for a bounce. Kind of showing some bearishness, right? Bearish sentiment widespread here in crude. So here's that crude chart. You do have a 5-wave drop from up here. Nicholas has a good question on crude. I will get to it in just a moment. Okay, so you were talking about, Nicholas talking about, can we consider we are in a wave 4 in oil? So are you referring, you're probably referring to a rally from down here, right? So would this be, you're counting this as kind of as a 1, 2, 3, 4? Yeah, so I was actually going to go there. So that's a good look, Nicholas. All right, so Nicholas is saying 1, 2, and I'm with him on this 3. And I was going to say, even though you have an impulse here, this is 5 waves down, right? 1, 2, 3, 4, 5. It's clear as day. Even though you do have that impulse down, this could be a flat, right? This could be A, B, larger C, right? Because this is a A, B, C. It's a 3 up. Okay. Obviously, from a more objective standpoint, right, a price standpoint, we want to see price just get comfortable above the median line again. That's where we really took off from, right? Once we broke above there, consolidated, we took off. We've now retraced the whole thing and more. But I do, like the pattern, if you will, and am looking for another leg higher in crude oil. Okay. Now, if we go even bigger picture here, I think it will help us understand maybe a little more context what the big picture, suggesting when you could actually get a bigger move. But if you look down here, also I'd be aware of about 49.60, okay, in case you do get one more slam lower. That is just the trend line from here. But looking for a low, if one may already be in place. Trading wise, the way I'd look at it is that if you get comfortable above the median line, right, like close a day above there, look to buy it on a pullback into the median line, stop down here, look to take it up to a new high. Okay, now this entire rally from June may very well be just an A, B, C. Okay, 53.94 is 2 legs up. It's also the year open, 53.87. So that's where I'm thinking that we could actually end up failing, in crude oil. And we'll go back, let's go to that bigger picture piece. So here's a weekly chart. I've put this in the one of the updates from a while back, but really the major slope is simply the trend line from 1986 to 2001. So it might be a little, well, here, hold on, let's go this way. So it might be a little early to expect us to go bonkers on the upside, but you see how important this median line is. I have kind of a highlighted, I don't even have these highlighted back here, but do you see all this back here? Especially back in the early 2000s, like so 02 in 03, right? So back then, what happened was we continued to test on this line, and then we took off, and that was when really the bigger bull started. Something similar might be in the works here. So you could come all the way back to 43.50, which is this line here. All right, is crazy as that may sound, but everything since 2016 could actually be a triangle, right? Everything since that point is overlapping. Okay, there's nothing impulsive about anything here, right? This is overlapping, so your count would look like this. B, C, D, E, right? Boom, boom. And maybe this happens, again, to just like gold, right? Crude oil tends to have a seasonal bias that's very positive in the beginning of the year. Now, this year is actually the exact opposite, right? The first half of the year for crude oil is like the worst year in 20-something years. Okay, so these seasonal things don't always work, right? If they always work, trading would be really easy. You literally just set it and forget it and go play golf all day. It doesn't work like that. But this is my kind of my thought process here on crude. So near term, yes, looking for the low. May have put it in today for all I know, right? You do have a clean structure 5 down, so looking for a bounce at minimum. And looking towards, again, the 53.60s before I would consider even turning bearish on a near-term basis, or on a swing basis, right? On a very big picture basis, I'm bullish crude oil, but you could most certainly trade 53.60s and then back down again before going higher. Okay, let's go to euro. Well, crude's holding up all right after that number. After the inventory number, we shot up, right? At least you didn't get one of these where you get, right? Sometimes you get one of these rallies and then it's just slammed, right? We didn't get that, so. All right, we'll go to the currencies now, majors, and you know where I'm going with this. Euro, I mean, simple here. We've got this median line. Let's look out. Let's look back or look out a bit. Excuse me. Okay, so I got all the crap here, right? Essentially, we've got, a 5 waves down from here. And this, again, just like the opposite of DXY or US dollar for that matter, in this case for US dollar, this could be large wave A of a triangle, right? And then we move higher off of here in a B wave, which if that's the case, we probably actually retrace a pretty good amount of this decline. All right. I'd be looking, again, 1870s, a slope line first, 1890 FOMC level. But eventually, triangles, if this is A, B, sometimes B even goes above the origin of A. Bottom line is I'm looking for a turn here. We've gotten, we have seen some action on the upside, with euro here. But yeah, it's a good level to do it, right? I mean, you saw the sentiment yesterday as expressed in the journal, right? Euro is rattled. That's the kind of thing that you do want to see before you get a turn, or near a low, I should say. So the order I'd put, which is still there, I just want to be buying it kind of on and around this median line. I mean, you can see how the market even back in July traded on and around it just below it, and then it took off. We came back and tagged it in August, right? August 17th, and then just kind of took off on the upside. Traded it here. We had that short from up here before the German election deal, and we got out here, had a rally, had the right idea on shorting up here. I just kind of wussied out. It was a Friday. We were going into a new month. I just, I don't mind holding trades over the weekend. Going into a new month, sometimes a little different story, especially when, you're just sitting at cost, right? So the right idea as far as looking for the 5th wave down. But once we got that and got a rebound, especially this reversal here, to me, that was reason enough to kind of turn from bearish to bullish on euro. Okay. And then if we go back here and look at here's the daily chart, DXY, we talked about RSI going up to 40. Really similar story here. I'm actually going to let me bring in a different chart. Let me bring in a momentum chart here. Bear with me for a second. All right, euro dollar. Okay. So I'm thinking that we're actually kind of like around here. We might have a fairly extended period of range action, right? Kind of the first major overbought signal on a weekly chart since the since the breakout, and we need to work that off. Remember the RSI contraction thing, right? Where RSI had spent so long above 30, is actually 9 weeks. That happened over here on the upside. You got more of a quick decline, okay? And then you consolidated for, I guess it was about 2 months, and then you went higher. But this is really the first breakout. So back then we broke out. I can zoom in a little bit for you here. We broke out. We came back. We tested the breakout level, right? Although not right away. It was a little tricky. tested the breakout level, took a while, took its sweet time. We kind of traded around the 13-week average, right? And I'm going to do some more work with this and maybe, present a possible analog. But look what's happened here. We broke out. We've tested the breakout level, right? That's 2015 high, 1712. So, can we trade around the 13-week average for, extended period of time? Seems reasonable, right? Yeah, so bottom line, I'm looking higher here. I'm not saying that we're going to 130 in 2 months or anything like that, but looking for a bounce. And I like the context of the 13-week average and everything there. And also, of course, just going to the daily chart, RSI, okay, right on this 40 figure. Again, that's exact opposite of DXY, which is up at 60. It's exactly what you want to see in a bull trend, right? We should not go really oversold if we're in this, strong bull move. Let's look back, say, in 2000 and, this big rally into 2000 and the 2008 high of the 160. Same thing, okay? You've had, bottoms were near 40, some were, close to 30, but never got oversold. Strong bull trend. Same exact thing back in the period that we were just looking at. 2002, right? Strong decline, yet RSI actually on the initial one was bottoming right on 40 the whole time. That's kind of more where I think we are anyway. So there's a lot of good technical reasons or technical logic to, suggest or say that, yeah, expect a bounce here in Euro. We might need to go into some consolidation because we had a pretty good move going up and we might need to work that off. But once it's worked off, we should be, headed higher. So as far as Euro is concerned, it might be kind of range trade for the next month plus, which can be extremely profitable, right? Range trade can be wonderful if you can catch it right. So that's where my head's at on that. All right, let's go then. We'll go to dollar yen here. Just tweeted out that possibility about a triangle in dollar yen. When I stand back and look at this, dollar yen, I'm really just, it's tempting to want to be kind of short dollar yen because, right, we've got the dollar resistance and gold looking for a bounce, but I just don't see it. It's not there. And last night's drop found support right at 112.33. That is the FOMC level. Okay, that's not insignificant. So the fact that we're finding support there kind of tells me that this is, if you're shorting dollar yen here, it's really a fight. Okay, there's other ways to short the dollar for resistance. I'm not sure dollar yen's one of them just yet. Now, if we can crack this 1233, it's a different story. Or if we can complete a triangle, it's a different story. But as far as I'm concerned, we're pressing this trend line right here. The next level, you might be looking at we might need a run on the July high. And, maybe that's what needs to happen in order to free gold from whatever, trap that it's in, right? So that would be up in the 114s. Doesn't make any sense with what I'm talking about with the dollar, but this is just looking at this chart on its own. I don't see much else of a interpretation at this point. Eventually, this blue line down here, again, this is all the way back to, this is a trend line, this channel all the way back here to October of 2011. But eventually I'm looking at probably this being a big support, right? Would be my best guess. It's been resistance and support, since last year. Okay, so that's where I'd be looking for support. We'll go to the 240 minutes. There is a fork here that you can draw. Okay. If you take a parallel off of it, you can get yourself a nice little support line to work with here. Okay, so 25. So that goes off here, right? All right. So essentially, we're talking about A, B, C, this little pop here in D, looking for another drop, maybe in E, but I would not want to I wouldn't want to see price go back below today's low. And if that happens, then you can get your triangle thrust to the upside to complete this rally. Okay. Triangle target would be 1430. Again, we've got the July high of 1450, as well as the next larger parallel up here too. So might be something worth considering over the next couple of days. Is a triangle breakout here in dollar yen. All right, cable. I think there's a golden opportunity to buy the British pound coming up. Here we go. So daily chart, but we'll go weekly chart here. So this is the 2007-2014 trend line. This parallel here, support back in March 2016, resistance on the nose in August, and that line would be about 3170, right? So one of the levels that was noted on a shorter term basis recently was 3214. Okay, that's more or less been hit, I guess. What was the low? 3222. And you've also got the shorter term level here. But, kind of widen it out. I mean, we see all kinds of, spikes and stuff, especially, got NFP coming up. So 3170. Also, you've got the square root level 3165 as well. You can see right there. Right. And that's actually been a support and resistance level at times this year. You've seen activity on it, right? So you can see right here, right? So yeah, I'd be looking at this area, 3214 to 3170. You just kind of have to wait and see, which one it's going to be, right? I mean, let the market come in, but we're very close to a major decision point in cable, and I'm essentially just ready to jump in once we get a move down into this region. On a really short-term basis, the red line here, this is just a short-term channel, was support. Remember back on BOE, which has almost been fully retraced, by the way. 3365, month open 3386 is a square root level, and this is going to be resistance on the way up, right? So looking for a bigger low, so that a range trade here is a viable option, but you'd be looking at essentially, minor resistance compared with more major support, right, on that 3170 region. So those are the two levels that I want to kind of trade at if given the opportunity, right? Okie dokie. How about Aussie? Aussie's interesting in that it has also hit, well, that's a 20-week average. The linear chart on Aussie's been cleaner than the log chart on a long-term basis. So I talked about that earlier, right? Sometimes you need to look at linear even on a long-term basis. So we are flirting around the breakout level with the Australian dollar. I still think, I think this was in the Sunday update, but I still think that you have potential for a more of a surprise drop down to the 76.60s in the Australian dollar before, before it's time to get longer term bullish again. Okay. And so really a short Aussie is still a viable, still an option here, right? This was the chart, I think, is A, B, C we were looking at, right? A, B, and then maybe a 1, 2, 3. This might be something of a 4, and then a C move down. This, I'm not sure about this fork here. To me, it probably is just adding. Pooja says, any reason to using a 20-week average? No, I didn't. I think I must have had that chart on daily before, so I changed it. I typed in the week, so it was a daily chart before. Because on the weeklies, I use 13, 52, and I like those averages, right? Anyway, we're looking here at same thing as before. So this is an option again, but we were looking at this into RBA. It didn't get triggered on RBA, but it could be triggered, tonight, tomorrow, whatever. But we'll be looking at 78.95 or so as resistance, and then for another drop. Okay, and let's just take a clean look at the Australian dollar here real quick. So, the whole idea of slope analysis, median line analysis in particular, is symmetry, okay? That's why we talk about when I say like the 75 line or the 25 line, right? We find resistance on the 25 line. And when we do, your natural inclination from a slope perspective is to look for support on the 25 line. Okay, that's it. That's known as symmetry in the market, right? You're trading either side of the median line in equal distance. So quite clearly, the 75 line has been great. Resistance, right? I mean, that's clear. Okay, it was resistance here on 727. It was resistance on 9.8 and then on 9.20, which was FOMC. So that's why I think that just based on that alone, it tells me that the next best place or the best place for an important low to form is going to be on this line, the blue line, 25 line. And that's actually where we took off from when we had that great rally back in July. Okay, so just this simple, beautiful look here at this Australian dollar chart. I'm looking there. It's a good deal lower, which means why not be bearish into it? So we're looking for shorts, and I think the best place to do that, probably going to be up here, right? 1, 2. This might be 1, 2, 3. This whole thing is probably a 4. A, B, see, right? You can see this ugly little drop here. So yeah, we'll be looking at a short right up into here, okay? So we'll have more on that later, but that is the thought process. Kiwi. Kiwi is interesting here in that we're on the 200-day average. You can bet a lot probably that people are buying it on here, praying that it holds. So I'm not so sure it will. You had that move last night, and now we've dumped. I think the next spot for Kiwi is probably 70, 90 to 71. Okay. Right here, you've got, that long-term parallel that we've talked about so many times is back there, and that was, it was good support back here in early September. But that's where I'd be looking down to that region. And the symmetry thing applies here too that I just talked about with the Australian dollar. So where do we come from just now? This is the channel that goes back to the 2015 lows, right? Crash low back in August 2015. We've come from the 75 line, right? I'll put that in red. Therefore, look for a low on the 25 line, which has been support before, by the way. So that gives you a pretty good area, to look for a low. Right? We'll call it 71, but you've also got 70, 90. What was that? That was a high from March 21st. And just for fun, let's see where the fib would be down here. 71. Isn't that awesome? Okay, so it looks like we could be looking for a low in Kiwi at 71, yet being short on a bounce a little higher in the Australian dollar tonight at some point, or tomorrow, whatever. Sometimes things get so clear and it makes me so excited. Okay, Canadian dollar, little bastard. Okay, here's the Canadian dollar. Kelly says your webinar is making my day. Kelly, that makes my day, my friend. Okay, that makes my day that you said that, so I appreciate it. We're zoomed in here on a 60-minute chart. This rally, I mean, there's not a better place. I guess there's always a better place, but there's really not a better place to sell the Canadian dollar than this median line. I mean, really, right? Center line of a channel. You had all this, it was big support. You had big reactions on it. And we've traded up and around and, into this thing since 9/28. So for about a week now. Now, if I was super bearish here, I would obviously not have a target. Where I do, I'd be looking for a larger move. But I don't want to be greedy here on this, especially because this 2012 trend line, and this is amazing. This trend line goes back to 2012, 13, 14, and look what it does on the near-term price action. I mean, this is really important stuff. Okay, it is resistance all the way until Polo spoke. I guess that was last week, and if we come back to it, my guess is that it's probably going to be support, at least for a little bit. So it would probably be a scalp long opportunity down there. But yeah, I'm not going to concentrate too much on this. I don't think there's a whole lot to go over that we haven't with the Canadian dollar. But 24.05 looking lower, have survived the stop by 2 pips basically so far this week, and I'm looking for a little more weakness down to 24.05. But then I would think that it probably bounces there. So yeah, just go there and then reassess. Or let's hope it goes there and then we'll reassess. Okay, I want to look at a couple crosses. CAD yen actually is one that I wanted to look at. And then Vladimir had asked about nat gas earlier, so we'll take a look at that. It's been a kind of a crazy market. Okay. So CAD yen. You have a major breakout, okay? That's not really an argument. I guess the question is, does it fail or not? Breakout level over here, okay. That's the 13-week, is right in line with it. My first spot that I would expect to see some support is actually right around here, around 89.40 or so. Yeah, okay. So yeah, around 89.40 or so. Okay, that's just the median line from this channel. It's always difficult when you have these spikes, like this was the election spike. You're not really sure where to start your channel. As many of you know by now, it's probably tired of hearing it, but I tend to not draw off of those what I know are obvious spikes. Okay. So I'm looking right here, for support. So just draw in your channel and the rest of your parallels, and that's kind of where I think we could get a decent low for CAD yen for the next rally. Okay. Pound yen, it's also one that I wanted to look at. Pound yen, we were looking for, we did a longer term chart of it, but this is zoomed in on the 240 minutes, right? But we had essentially 148.45 was the big level for support. The best possible scenario would be to get a drop into about 147.70. So watch for resistance on the way up. Pretty close to here, actually, around 145, and then 145.50 is the month open. So you have a channel here. I'm looking for a low. Again, I'd like to see it down here. I don't know if that's going to happen, but yeah, that's kind of the way I'm going with pound yen. So that would put us around 148.45 to 147.70. Let's see. There we go. So you'll see it better here. This was the chart from the other day. Okay. And this is just the channel from 2011, 2012. As you can see, you've got some pretty good pivots on these things. And this line here, 25.75, okay, essentially resistance back in July. And if we can get back into this region, which we're calling, 47.70, which is what I just mentioned before on the short-term chart, to 48.50, that's your ideal spot for the next low, okay? Those are the two crosses on yen that I would be kind of most interested in on, the long side, right? Pound yen and CAD yen. Nicholas, it says last week we looked at pound CAD. That's right, we did. Let's go back to that. I think we had it. Yeah, we did. We looked at pound CAD and we had it. I think we might have had it right over here. Oh, here it was. Okay, yeah. So we looked at pound CAD last week, and we were talking about resistance, basically, right? Yeah, and we got it, actually. It looks like Friday was the high resistance, and you're asking about bias. Yeah, so my bias here, Nicholas, would be support down here. I'd be interested in buying support down near 63.50, okay? So this seems to be playing out fairly well. You can imagine if you were to get kind of a drop into the 63.50, you'd actually have a pretty good looking prospects for a head and shoulders bottom, right? To take it higher. So that's what I am looking at in terms of pound CAD, okay? All right, let's go to natural gas. Did have questions on natural gas. Okay. Probably the same thing we looked at last week. Seems to be hanging by a thread. Is this the 200-day? Yes, it is. 200-day. And this is a shift fork back to the March 2016 low. Again, it's just holding on for dear life. So, long here with a stop under the low from yesterday might actually work, considering that this is just, if it goes below there, I can't imagine that it holds up. If it goes below there, you're probably headed way back here to 268 at minimum, okay? I guess you have the natural gas numbers that come out tomorrow. But yeah, Nicholas, Vladimir asked about this. That's what I'm looking at here. This could be a very complex head and shoulders bottom, right? Okay. All right. So I'm going to wrap it up there. Thank you, everybody, so much for your time. As always, I truly appreciate it. And we will do it again next Wednesday, of course. Have a wonderful rest of your week and a fun, happy, safe weekend coming up. And yeah, I'll talk to you guys later. All right. So yeah, remember the site is, apologize for this how slow it is right now. We're working on getting it all fixed. Hopefully the next day or so it should be up and running normally. Okay. Okay, guys, take care. Talk to you later.